In this presentation, we will enter adjusting journal entries related to equipment and depreciation for our more complex bookkeeping method. For more accounting information and accounting courses, visit our website at accountinginstruction.info. In other words, the bookkeeping method where we entered more information into it. In our more complex bookkeeping system where we veered away from the cash basis a bit, we had already recorded the equipment at cost at $15,000 and we recorded the loan of the $6,000 as well as the amount paid. So it's already on the books at this point as the 15. So we've done some of the work that would need to be done. However, we would still need to provide this information to the tax preparer at the end of the time period because they need to know what type of equipment it is and they need to be able to list it in the correct category. So even if we went to this method, it could save some time on the adjustment process, and it would make our books more proper as we go, but it still doesn't eliminate the process of the adjusting journal entry, even in terms of giving what type of equipment it was that was purchased, and it also doesn't eliminate the need for the depreciation, which we'll still have to do here. So it's on the books correctly now, but we're still going to do that depreciation. This is something that would be done in the tax software again, and we'd have that same adjustment what we would need. The 15 divided by the number of years, that gives us depreciation. This is a simplified method. And remember that if there was multiple equipment, even if it was equipment for the last 5 years, we would still have to list it all out and depreciate it over however many years it's going to be depreciated. So the depreciation schedule, especially for a company that's been around for a while, can be quite complex, even though the depreciation calculation for one piece of equipment not too difficult. Once you're talking about multiple pieces of equipment, it starts to get complex just because of the multiple pieces of equipment we're depreciating. We'll enter this adjustment into our folder here, into our file for the more complex QuickBooks file. I'm going to open up that QuickBooks file by going to QuickBooks Data File. We're going to go to QuickBooks 3 and enter that information into the QuickBooks 3 just as a practice of what it might look like. And remember, this is an adjustment that we would have seen at the end of the process by the tax preparer, but just to get an idea of how they might do this and what it might look like in the systems that they could use. And we're going to go back and look at it in terms of the Excel worksheet. So we're going to go to the Documents and the 2019. We'll take a look at the QuickBooks 3 Adjusting Entry worksheet and see what it would look like. Here's our QuickBooks file for the Q3 file, the more complex file. We got the open windows open. We're going to go to the reports now, go to reports drop down. We're going to go to the accounting and taxes and look at that trial balance. Within the trial balance, we'll change the date range from 01/01/19 to 12/31/19. That's January to December 2019. And this time we have that equipment on the books for the full 15,000 now. So we've done that piece. If we double click on it, we say, okay, here's the 15. If I double click on that, then we're going to say, what happened here? Well, we put it on the books for 15, but only 9 was paid. And then we put this on the books, the 6,000 payable. So we did the whole process this time more properly with this system. We asked the client, hey, was this an equipment? Did you finance it? They said yes. We said, okay, we'll put the whole thing on there, including the financing. So if we close this back out and close this back out, we then have both the furniture and the loan on the books going forward. They might still need to calculate the interest on the loan or whatnot, but the equipment went on the books at the right point. So if we look at the Excel sheet, then what do we need to do too? All we really need is to adjust the depreciation on the equipment. So the equipment is on the books. We're going to calculate the depreciation and accumulated depreciation in the same way that we saw in the prior presentation. So I've added the two accounts here, accumulated depreciation, depreciation expense, same journal entry. I'm just going to copy the depreciation expense and that'll be here. We need to do the same thing here. We're going to use the 3,000 that we calculated. So the 3,000, it's just an estimated calculation here. And then we're going to credit the accumulated depreciation. I'm just going to right click and copy that. You can just type it in here as well. And there's our entry. If we record this, then we're going to say depreciation expense equals this amount, enter. So it goes up, bringing net income down. And then we're going to go to accumulated depreciation equals the credit, enter. So same thing, we got the equipment on the books. We're going to say that it went down in value by 3,000, estimate, book value then 12,000. We expensed that 3,000, bringing net income down by the 3,000. So we were at this 2,236 before our adjustments. We're actually at a loss now after these adjustments. We can do the same thing in QuickBooks. If we go to QuickBooks, we're just going to go to the company up top, and we're going to go down to the make journal entries, and these journal entries will be as of the end of the time period, as of 12/31/19. At the end of the year here, we're going to say depreciation expense, and it'll have that account because QuickBooks will guess that we'll have some depreciation. 3,000 debit, ADJ for depreciation. Let's say depreciation, hopefully I spelled that right, and then accumulated depreciation, and QuickBooks should have that. Note it's a fixed asset account, so accumulated depreciation, I'll just copy the memo, and there it is. So same information. If we were doing the adjusting entries, we could try to just do it in QuickBooks and then record it, and then go back to the trial balance and say, did it do what I think it should do? What should it have done? Well, we think there's the accumulated depreciation related to here. Those two go together. There's the 3,000 here. That's not the 3,000. This is the 3,000. Seem to have some repeated numbers here. So if we wanted to check the profit and loss and see if it ties out to what we have, we can go to profit and loss and say 01/01/19. Did I do that right? And 12/31/19. And if we scroll down, we're at 764. If we go down to our information, we have the 764 as well. For more accounting information and accounting courses, visit our website at accountinginstruction.info.